students have learned a lot about the accounting principles as a part of their curricula. We would like to hear more from you in terms of its relevance and implications in the business world.
Many non-financial managers, they have a kind of a vertigo when they hear this particular financial accounting thing. If we use the word something like inventory turnover, they actually think that is inventory rotating in the shelves or something, or is if something like a terminology like approval comes or something like outstanding comes, they cannot relate it because the English dictionary meaning of this particular words or terminologies is totally different from what we use in accounting. So basically your principles of accounting and conventions of accounting will give you an idea of all these terminologies as such, what exactly it means. So it will make your things very easy to understand this language. Also, we call accounting as a language of business, and communicating the same among the business segments is very easy if you know this language. And it is very much essential because accounting is required in every walk of life. It is not that, I am not a chartered accountant or I am not a finance MBA, so I don't need accounting. It is not like that. So since we talk about a language, accounting being a language, this language would definitely have certain grammar to it because every language has a grammar, and grammar is all about the rules and regulations of how to use this language. Likewise, accounting also has this language wherein we call them as principles of accounting. And when we say this as principles of accounting, these are the set of rules and regulations which are being framed to make the accounting policies uniform maybe across, and also it will help you understand the entire process of accounting. So knowing principles of accounting and its implication is very much essential for every business manager. You cannot just say that I am a marketing manager, I don't need financial principles. Right. So likewise, we have a lot of principles which are there. These are set rules. It is not something like they keep on changing or something like that. These are set rules. Like 1 + 1 has to be 2, like that. These are the principles which are there. So these are the set rules which are there, which we have to understand and follow them. So that is where we require these principles, and then we say these principles get further classified down to conventions or concepts as such. And each principle will actually tell you how to represent a particular item in the financial statements. Now, we generally make 3 financial statements are considered mandatory to be made. It is a mandate which is there. There are compliance requirements for this. So income statement, balance sheet and cash flow statement. These are the 3 important financial statements which are required as a compliance, as a mandate. And when you are making this financial statements, there are various line items in this financial statements which you make. So how do you actually get those values? Where do you actually place them? All these rules and regulations are there in this accounting principles. These accounting concepts and conventions are going to tell you how do you actually calculate the values, how do you actually represent the values, how do you actually show it in the financial statement, what is the relevance, why this value is calculated in this particular way. All these things are being said in these financial statements using this principles and conventions.
Absolutely. So, you spoke about conventions and you also spoke about concepts. So what is the difference between the two?
When you talk about a word like concepts are these assumptions, as simple as that. Irrespective of the type of the company you are, irrespective of the location of the company, the nature of your business, the size of your business, the area of your business, the industry you are into, these concepts have to be followed as it is. So maybe a banking company, or you are an ITES company, or you're a pharmaceutical company, or you're located in India, or you're located in some European country, or you're located in some South African country, or a US country, all you will follow the concepts as it is. Whether you're a small size company or a big size company, doesn't matter. The concepts are like this assumptions. It has to be followed as it is. It do not change from company to company as such. That is what we say is a concept or concepts of accounting. Whereas when we talk about conventions, they are more like tradition. So every household has its own tradition. Likewise, every company will have its own tradition. So Indian company will have a different tradition. Just to take an example, in India, we would be writing our books of accounts in Indian rupees.
Right.
But in US, we would write it in US dollars. That is a convention kind of a thing. Here we might be following April to March as our accounting calendar. But in some other country, they might be following Jan to December. So it is a convention. So they are like traditions which are there. And these traditions is what we call them as conventions. So a small size company might have a different convention. A banking company, if you normally see a banking company balance sheets, you will see it will have different line items. It will have loans in the asset side, which might actually shock people that how loans can come on the asset side, but it is a banking company. So loans would definitely come on the asset side. Or if you look at the ITES company, you will have more of intangible assets in their balance sheets rather than tangible assets. So it depends upon the nature of your business, the type of industry you are, the size of your business, the location of your business, even your, what you could say, how old a company you are. All that will define your conventions. So conventions are more like traditions. That is what is the difference. Concepts are assumptions, conventions are traditions.